Hello guys, it's another market update from the trading plan. It is March 26, 2018. And in fact, I wasn't planning on making a part 3 to this series of is the market correction done? But you know, the market fools the majority of people, and in fact, it also fooled me, as I thought that we were in fact gonna consolidate a little bit here before moving higher. But you know, the market has its own agenda, and actually, if you watch my first video, part 1 and part 2, I mentioned that my preferred scenario was a double bottom, and now it actually looks like that's what we're gonna get, is a double bottom. And I wouldn't be surprised if we undercut the bottom before going much higher. Now, the reason that I initially thought we were going to get the double bottom is, if you look at past corrections, that's what normally happens when you have a big down move like this. And usually the uptrend from the low would fail at the 50% or the 61.8% level. And because we sort of went higher, the probability of a double bottom at the 78.6 level is very unlikely, but that's what we got. So now what can we do with this information? We are probably going to have some more volatility coming into Monday, and we are at a low on the weekly, so I'm expecting a bounce in the short term. So maybe in Tuesday or Wednesday we'll probably have a bounce, and then we'll see how sustained that bounce is, if we get a double bottom, or are we just going to get a much deeper correction. Potential level of support 245, and then 233, and as long as we stay above this trend line here, we are still going to be in a bull market. So as of today, I'm going to assume we're just having a correction. Now, some negatives is we broke below this trend line here on the RSI, so we are potentially going to come back to test this level, which we are right now. And once we fail, or if we fail it, then it's going to come back here, and that would be potentially the bottom. And hopefully we can see some sort of a divergence. So this looks like a potential divergence in the weekly, but it may potentially go lower. So we'll see what happens next week in the market. I do have some time cycles here, but time cycles will get a bit messy here, so I'm not going to go over the potential cycle turning points. So one other thing I was looking at is a longer term chart of many of the indices. And so what happened is we actually hit this 1.61 extension level. So that's what basically that is telling me, is don't expect to see new highs anytime soon. We're probably going to be range bound for a while, and if we can survive this range boundness, I guess, if that's a word, without going much lower, hopefully we don't go lower than this level. Otherwise, we can probably see something more serious happening in the next few weeks, months, and possibly years. If you look at the Dow Jones Industrial Average, same thing, 2.618 level got hit, and we didn't get any fib levels here, but I definitely do not like this candle on the Russell 2000, which usually is a reversal candle, and this is a monthly chart. And on the S&P as well, we didn't quite get, well, depending on how you draw the fib, we didn't really get a fib level, but two of the 4 major indices that I follow hit like a fib level. So this is just telling you to be a bit cautious. The other thing is, one of my favorite industry is semiconductors, and we have this nasty reversal candle here on the monthly chart. We did have a bullish reversal candle the previous month, so my guesstimate here is that we're probably going to be range bound for a bit. If we fail to stay above here for a few weeks or possibly a few months, then we're probably going to come lower. So we'll have to watch and see what it does. Tsx Index, so this one has been sort of in a bear market, not really a bear market, but a sideways market since 2008. Now, some good things happening is, I guess, the marijuana sector in Canada. And so actually we had like a little bit of selling on, if you look at the daily chart for the TSX. And one good thing I noticed was actually it looked like the marijuana sector actually did not did not sell off as bad. So we had actually a 1.5% update, right? And we're holding this trend line. We do have some good daily signals coming up. My favorite in this sector is actually canopy growth, just because of the relative strength it's been showing. You know, it just has to basically clear this. It's been stair-stepping its way up, and it's forming this beautiful cup and handle. You know, compared to some of its peers like Aurora Cannabis, which has sort of been, you know, it's now broken below this level. I still think it can bounce, Aurora Cannabis can bounce, but you know, I'm just kind of watching what some of the stronger peers or stronger stocks are doing within the sector. Now, so this is one good thing going good for the, I guess, the Toronto Stock Exchange. Another good, I guess another sector that is looking good is actually gold. And you know, there's a lot of mining stocks in the TSX, as long as energy, and so I'm seeing a lot of money flowing into cyclical names like energy, sorry, not energy, into gold, silver, any of the mining or specialty chemicals company. So if we take a look at gold, we essentially broke out of this bear market trend line here, black line, and you know, we had this bear market channel. Now the only thing I'm waiting for is a break above this, the 1400 level for full confirmation. So I also have a chart of a silver to gold ratio. So the silver to gold ratio, basically, you know, when we get down to this level, it tells you it's time to buy. Same here, same here. I guess it didn't happen here as much, but we got another low here. It's telling you it's time to buy, and we're also again getting very close to that level. And also, you know, when we get to these extremes, it's time to take some profit. So the other thing is we have potential upside targets for gold. I'm, you know, thinking in the next 3 to 5 years we will, you know, get to 2,452 in gold. I am just waiting for the confirmation that, you know, once we cross about 1400, then we can start a fresh position. If you want to start a fresh position now, we may still sort of consolidate a bit longer. Seasonality, so seasonally speaking, the strength comes in July. So we'll have to see, you know, if it pans out the way. I did write a post more detailed on gold in my blog, so the next bull gold market, and I've written more in detail as to what my reasons are for being bullish on this sector. So take some time. I'll put a link about my blog at the end of this video or at the bottom section here. So have a look. So we're gonna have to watch. Like, I'm noticing, you know, again, money flowing into different sectors like the miners. So it'll be interesting to see, you know, what happens. I'm expecting some more volatility in you know, 2018, and if we fail to make new highs by next year, 2019, then potentially we could have a more serious market crash. But based on the information that we have today, I'm just going to assume that, you know, this correction is going to continue. We'll see if on Monday we can hold these levels, then we can expect to see, you know, a bounce higher. And if we don't, then I wouldn't be surprised to see this correction take a much longer before we do go higher. So thank you guys for watching this market update from the trading plan. Stay tuned for more videos. Ciao.